My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome, everybody. Welcome to Cramerica. I hope you make friends. Hey, look, I'm just trying to make a little money. My job is not just to entertain, but to educate, teach. Call me at 1-800-743-CNBC. Tweet me at Jim Cramer. One of the most stunning things that's happened in my lifetime was when Nixon went to China, totally out of nowhere, 1972. We thought we'd done something unthinkable. We'd embraced Mao Zedong. We decided our mortal enemy was no more. We were going to be acquaintances. In 1979, we normalized relations between the two countries. We did $1 billion in business in the next year. In 1985, we imported nearly $4 billion from the People's Republic of China. 2001, China got into the World Trade Organization. We bought over $100 billion in goods from the PRC. 23 years later, the number is roughly $439 billion, an insane amount, especially given how little they buy from us. But those days are over. Now, excluding the first 3.5 months of the year, it will be almost nothing unless the president can cut a deal, something he doesn't seem that eager to do. I don't know about how you think it is. Hey, by the way, the Chinese aren't too eager either. Now, I think that what's dawned on people today, and it was not a pretty sight, is that maybe there is no deal for some time. That's why Dow's tumbling 1,015 points, S&P plunging 3.46%, NASDAQ plummeting 4.31%. Okay, it came on top of some amazing results yesterday, but the sell-off decimated some areas and left us think that this China issue could be with us for a while. We now have a 145% tariff on Chinese goods. Now, a number that high, frankly, isn't really a tariff. It's more of an embargo. Almost nobody's going to pay that much of a markup. It's a recipe for losing money. I think Trump knows that, and he seems more angry at the previous presidents who gave away the store than he is at President Xi, whom he always says he respects a great deal. As much as I sympathize with what President Trump is trying to do here, and I do, we simply aren't ready yet for this. As a nation, shamefully, we've gotten addicted to cheap Chinese imports. Last year, we imported $127 million in electrical equipment alone. Think smartphones, computers, lithium-ion batteries, video games. We brought in $85 billion in Chinese machinery like computer hardware, industrial equipment, toys, games, sports equipment, $32 billion, plastics, $21 billion, $20 billion in furniture. And you can expect, as you figure, it's Walmart, it's Amazon, Target, Home Depot, and Dollar Tree. They were the big importers. Now, I want you to imagine what happens when these imports dry up. It is not good. We do not have enough sourcing capability around the globe to make up for this lost merchandise. Now, layer on our companies that have high revenue exposure to China, Las Vegas Sands with 63%, Qualcomm 62%, Wynn Resorts, we just saw them 47%, Corning at 33%, Intel 27%, according to Goldman Sachs. And I got to tell you, they're all hung. And then figure out which companies are using China as a major base of manufacturing. Apple, 70%. Hewlett-Packard, 40%. Dell, 40%. HP, 30%. And that is harrowing. These numbers are from Bank of America Research. Much longer set of numbers available on CNBC.com if you're intrigued by this. Long story short, hate it or like it, and I hate it. Our economies are deeply intertwined. Now, I don't want it, but I don't know about this way of doing it. Our people are definitely going to take a real hit from this. We'll survive, but it's incredibly disruptive, very inflationary. I fear that the Chinese will have more stamina than we do. Their people may have a higher pain threshold than we have. They live in an authoritarian dictatorship. They're on a warrior footing. We aren't. Now, it's possible that we can find alternative sources for some of these things, but you can imagine empty shelves in almost all the stores for Christmas. A Dick's, a Best Buy, a Target, and maybe not a Walmart. Maybe Macy's. We know there are other countries that are clamoring to make the things that China makes, but it's not realistic to believe they can pull it off in such a short period of time. The companies that are dependent on China, companies like Apple, are going to have a very hard time moving their manufacturing. They'll have to take a monumental hit. I have said own Apple, don't trade it for years. But boy, oh boy, will Apple suffer if the White House doesn't cut a deal, or at least give Apple a needed exemption, as it should have given, because it's pledged to do so much here. Is the market reflecting any of this? No. But something else is happening, too. People are investing in companies, just started yesterday, that don't have all that much exposure to China, or none. You can see it in healthcare, excluding drugs, which are still facing the possibility of their own set of tariffs. United Health Group and Humana are good examples. They were up once again. I mean, it's really incredible. Former up nearly 3%, the latter up 2%. Cencora and McKesson, you know those middlemen, they always work. Kroger rallies 3%. Why not? American grocery store chain. Con Ed's doing well. Utility, Verizon, Perfect, Coca-Cola, Waste Management. Yeah, these are timeless. The best, you know what's the best? TJX. A ton of retailers will have to order a lot of inventory to be able to get through the holidays. Too much inventory, and they'll then have to offload their unsold merchandise to TJX. There's a reason the stock keeps finding itself on the new all-time high list, other than the fact that I'm next door to one and I go there all the time. Finally, and most obviously, there are 3 retailers with the balance sheets to win and to own. It's Amazon, Walmart, and Costco. Take a look around at all the other retailers. They could be in their death throes, death by withdrawal. With the exception of the 2 big box hardware stores, I don't know how they can make it if they're up against those big 3. On the other hand, there are a lot of hidden problems. Companies that are relying on some key elements from China. I was looking at a deck on Stanley Black & Decker, stock that we fortunately sold at a good price for the Charitable Trust. $1 billion in their cost of goods sold came from China. They said that a 10% China tariff is equal to $90 to $100 million for them. And we're doing 145%. Best Buy, oh, another tough situation. Oh, man, they got a source from China. No, thank you. Of all the companies that we'll never know that need parts made in China, parts you never heard of, well, that's going to come too. What about these companies, the auto companies, the trucks, the machinery, all the automotive afterparts, all the stuff that we thought we were making, they've been making? Sure, we can do without their sandals and their pens. We don't need their gift wrap and their printed bags. We can get Samsung stuff from Korea to substitute for Apple, even though we certainly don't want it. They're the winner. Yeah, Korea. And the best company in America is the loser because it bet too big on China. Remember, this all happened because our previous leaders decided that we might as well outsource our manufacturing to other companies because they could do it cheaper than we could. I like to mention my dad's business because it's so pertinent. My dad represented the best gift wrap companies in the world in Philadelphia. He sold the very finest, Champion, St. Regis. I still have some of the rolls from 50, 60 years ago. They are gorgeous. But China came with this real cheap, nasty gift wrap. And America likes cheap. One by one, the mills that my dad worked for went under. It was a terrible business. Then one day, he switched sides, worked for the Chinese, because they made themselves the only game in town. All the American guys were out of business. They all got wiped out. He sold their plastic bags. And, hey, they treated him fabulously. He developed a terrific business starting at 72, was still bubbling at 92 when he died. He had a great last month. I know, I had to pay the taxes. But how about the people who were in the mills Pop repped? Who knows? And from the heads of both parties, who cares? Sacrificial lamb shanks. I think what we saw today was the beginning of a sorting period between those that have no China exposure and those that do. Unfortunately, those that do employ a lot of people and are excellent companies, but they may not be excellent enough to make it through this new environment. And that is a real shame. Oh, I'm sure we can live without China. Really. But America will be a far more expensive place with lots of unemployment and reliance on other countries outside of China. Yes, I think we have to take them on now or never. But there'll be lots of pain ahead, more than we might be willing to take, and we got to do some changing in some portfolios. So the bottom line, is it worth it? Depends. I think it's worth some temporary pain to drive a hard bargain, though, and get a more favorable trade deal out of the Chinese government. But it's not worth it to go back to $439 billion in imports to zero. Unfortunately, I'm actually thinking that might be where we're headed. Hey, how about Tanya in South Carolina? Tanya!
Hey, how are you?
Tanya, I'm dynamite. How about you?
I'm wonderful. I'm excited to talk to you, but I have a question.
Yeah.
This is my first time investing in stocks, so what do you think about Coca-Cola for a first
I love
time?
that. I think it's James Quincy is terrific. It's got a good dividend. It's really well run. It's got an international presence, but at the same time, it's not has a China problem, and it's doing well in this environment. You have a winner. Hey, why don't we go to Josh in New York? Josh.
Hey, Jim.
Josh.
First-time caller. Big fan.
Excellent.
I was born in Philadelphia, and I've got a baby on the way, so I'm bullish about my own future here.
Hey, I like everything about you so far, Josh. This is the best date I've ever been on. Well, second, my wife was dynamite. That was a great date. It was a blind date, believe it or not. Go ahead.
All right, and wanted to see what your thoughts are on Estee Lauder. The stock hit an all-time high.
No, Josh, it's just a total turnoff, man. Everything was going so well between us, and I got to break up this date right now, right here. Estee Lauder is one of the worst companies I've ever invested in. I don't want you to do that. As a matter of fact, I got 499 others that I like more. I am very sorry, but we're going to have to end the relationship right here, right now. Let's go to Mikey in South Carolina. Mike.
Jim, how you doing?
I am doing well, Mike. How about you?
I'm doing great. Hey, thank you so much for taking my call. And before we get started, I just wanted to say that on behalf of myself and family here in Ohio, that we love you and appreciate everything that you do, man.
All right, guys. All right, I'm looking at my staff, telling them how great this is. Thank you so much. You've been a couple of challenging days. Holy cow, getting up at 2 a.m. to see people wrecking the market and stuff and then not being able to get back to sleep. You bet. What's happening?
Hey, I've held Shopify now for more than 5 years and wondered if you thought it was still worth accumulating shares, especially
better
since
than ever. The Shopmaster, I think it's great. Harley's great. I love those guys. I think you got a total winner. I would not trade. I would not move a share. Shopify, yes. All right, look. I just don't think it might be worth the pain to go from a $500 billion in trade with the country to zero like that. And from this tape, it looks like the market agrees with me. Remember, I share the goal of the president. I just don't want it done as precipitously, okay? On Mad Money tonight, it's hard to find winners in this volatile tape, but I've spotted some opportunities in the domestic food retail space that I think could work here. You might even know them. Constant stream of tariff updates, not from here. Then I'm taking a look at one lesser-known farmer named Sherry if the recent decline could be a buying opportunity or not. And as I just said, this market is shying away from anything with China exposure. So should you invest? Maybe you should turn to a regional bank, Key Corp. When I'm looking at a financial, I'm getting the latest from the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.